Hello and welcome to our viewers on Crux Investor. We're here today with Daniel Major of GoviEx Uranium. We're going to be talking to him about a number of subjects. You can find those in the description below. Click on the timestamp, that'll take you to that part of the video. And please remember to click the subscribe button to join our YouTube channel. And also, if you want to see more videos like this, click the notification bell. Let's talk to Daniel. How are you?
I'm doing good, thank you. I'm doing good.
We're at the WNA.
We are at the well, not technically, but yes.
Your home turf. You haven't had to travel too far.
No, I haven't. No, and it's nice. I mean, I think we all look forward to WNA each year. There's always that feels like it's the next benchmark of where we're going. And I think, I think there was a sense I got the other day at one of the uranium conferences pre to this, which is, this year's been on stall with the whole Section 232 thing. Mm-hmm. It got out of the way, and then we went into the August holidays. Yeah. And everyone now kind of feels this is the time that the year's going to finally get going.
It's another benchmark.
Yeah.
It may be another disappointment though. What do you think we're going to get out of it?
I think all of the things that we had before still have been sitting there. You've got rising demand, that's very clear, and I understand that's what the fuel cycle report will be telling us. But what also you're seeing is there isn't a lot of supply around. You've got great commentary coming from Camecos and KazAtomProm, particularly KazAtomProm, that are making it very, very clear that they're not going to restart anything until at least the tier 1 projects have restarted, to quote them. So they've taken what, £40 million out of the market. It's in deficit. Inventories are coming down. Camecos hardly bought anything this year, yet they now make it clear, they kind of reiterate the point. They have more to buy in what's left of this year than they have bought in the whole of this year so far. Yeah. So I think you have had this situation that the uranium industry and the nuclear industry, but the uranium side of it particularly, just went into a pause the whole year. Right. While everybody just sat and stared at Section 232.
We'll come back to supply demand in a second.
Yep.
I want you to answer the question. What are you expecting out of WNA? What have you come here for? What are you going to learn? What do you want from it?
I think what I'm looking for is, let's put it this way, I think optimism is what we're looking for here.
Are you seeing it?
Yes, I am.
From who? What sort of people?
The bigger suppliers, particularly, are looking a lot more optimistic than they have been.
Why?
I think because their sense is back to this comment I had earlier, which is everyone has been in, freeze frame. Nothing's really been happening. The sense is, no, we have to get on with this industry. The big picture is doing well, but now people wake up to the fact that inventories are falling, and actually, guys, you're going to need some material.
So they're optimistic about the macro, but nothing's happening. There is no movement in price.
Not yet.
There's not much movement in equities.
Well, equities will always follow price. I mean, sure. At the end of the day. So, you're driven by price.
Yeah.
But you look at it. I mean, actually, if you go and look at the longer term chart for this year.
Yeah, I get it.
It's actually a bull market chart.
Sure.
I mean, it's got rising troughs all the way through it. So, yes, we all look at it in the minutiae, and you look at the little chart that UXC sends out, which sends you about 2 weeks of data. Yeah. But if you actually look at, the last 12 to 18 months, you actually have a rising bull chart.
Okay.
Rising troughs.
But nothing's happening.
Well, that again, I wouldn't say that's a nothing happening. That actually is an improvement on where we are and continues to improve.
But you know what I mean? Forecasts are forecasts. And those charts have been like that previously in this cycle.
Not to the same degree. I think we have now reached a point when I look at the chart and go, I get comfort this is looking a lot better than it has for a very
So John
long time.
Borshoff this morning said to me, and what I know you know John, and whatever you think of John and whatever people understand of John, he's calling there won't be a meaningful movement in price till 2120 or 2122.
That's very un-John. He's normally the screaming bull.
But he may have a different business model from you. So what are you calling?
I think you are going to see slow and steady from now on. I'm not looking at you and I have had this conversation before, which is I am I've never been calling for a screaming bull market.
Yeah.
I think we've got slow and steady price movement off this point going forward, and I think that is still exactly the model that's going to come through. I think we were put on pause by what was going on in the US. We still haven't finished that, of course. We've got the 90-day thing. But that's,
agreed.
you know, there was just over a month till that finishes anyway now. And then we'll see what the answer comes back. But it's interesting, even listening to the US guys I've been talking to, you know, everyone agrees that quotas and tariffs are off the table. There is some sense of, yes, we'll try and work within the, you know, even if it's just looking after the reactor fleets that are on aircraft carriers and submarines, there will be some kind of support structure going into play. So I think the big issue that seemed to have been putting the brakes on buying has gone away. You know, certainly talking to some of those guys, you know, people are calling for material to be bought, to buy, but, you know, it's not available.
But that's quotas and tariffs. What do you think about subsidies?
Look,
or what's the conversation? I know it's not just you. But.
Yeah, I mean, I obviously, I don't think anyone actually knows what the final answer is going to be out of this one, and that's the reality. What is it that comes through? If it's a subsidy, in what form is it provided, and who gets it? I mean, that's the other question. Who gets that subsidy? Is it spread across all of them? Is it going to be enough to do anything, or will it be individually placed? I do not know the answer to that question. But what I think it is the utilities are less worried about it now, is the sense that's coming across. And we're coming back to a more normal uranium market, which we haven't seen for quite a while.
Okay, so that's another benchmark moment, to use your phrase of earlier, where there's more likely to be some decision making off the back of than, say, the WNA or the not 232 non-event, or any of these other shows that people go to. So that's a big moment for people to look for, and that's what, end of October, middle of October?
Yeah, beginning of October.
Beginning of October, okay. So
and then the other thing is, you know, is Camecos' comment. I mean, they've got some 12 to 15 million pounds uranium still to buy this year, and that's for this year's requirements. You know, and a point they made the other day at a conference was, but they normally have, and they've then got to be buying for the first quarter of next year. So it's actually bigger volume that they need to go and find. You know, and they gave an example the other day where, you know, back in May when they were looking for material, they went out on a bid on an RFP for £1 million, and they found 300,000, and they wanted the rest. They got to pay another $1, and then more than that, you want another $1.50. So, you know, one of the questions was talking the other day about, you know, secondary material. They said, well, you know, with the enrichment price, the conversion price going through the roof, and the fact that whenever they go out on a bid, it's not the enrichers who are offering it up. You know, there isn't that large amount of secondary material just sloshing around either. So, you know, you put all the bits together. You know, we have had improvement this year. Yes, it's gone sideways for the last couple of months, very much on the basis that no one really seemed to know what to do.
Okay.
You know, if the fuel cycle report is kind of as positive as being indicated, I think you're going to see people starting to wake up to the fact the market has to move. Okay,
let's not talk about macro. We've talked macro so many times, and it's well covered within a lot of our video interviews. Let's talk about your company.
Why not?
Okay,
for a change.
So for a change, you're in Niger.
We are.
You've been there a while.
Good. Been there. Started there as a company in 2007.
2007, right? Developing. Well, working out what to develop and then starting to develop this asset. Okay, so tell us a bit about what's happening in Niger as a jurisdiction. You know, why is that a good jurisdiction? Talks about your relationship with the government. Maybe that's the starting point.
You know, we put an announcement out back in August where we did the first stone laying on our project. It was really, rather than first stone laying for construction, it was the first stone laying for the project formally to advance. And what we did at that time was create the Nigerian incorporated company with the government. So that company is now formed, which will be the mining company to go forward when we go into development. But what it also did at the same time is we announced the conclusion of a transaction with the government. So we were sitting, they get a 10% free carry. The government had changed its strategy last year, basically on the basis which, you know, there's no point in a government buying into mining companies, putting in equity and then waiting for dividends to come back out. It's not a very good investment, particularly when you're a relatively poor country. But in our particular case, they saw the merits of effectively giving us a non-recourse zero interest loan for $14.5 million. So they've taken on an additional 10% equity stake for that $14.5 million that we owed them. They felt that was the best way to get us going forward. So our commitments are into the project itself.
It's bartering. No money's actually changed hands, but
they got 10%.
Equity has. Okay,
yeah, and
so
but for them as well, you know, the agreement includes the fact that we have the right to buy back off them once we get up and going.
Right.
So that's how they see it. So and they're also delivering us back all our exploration properties because they had come to the end of their life, and we're getting the whole lot back. And we are revising the shape of the mining permit to include the Miriam ore deposit and the MS in the underground deposit as well.
Yeah.
So we expand the total resource that's actually contained within the mining permit that's available to be mined as the mine starts.
So a lot of good things going on there with the relationship. So I want to talk about some of the other players in the market before we get, literally dive into your project. So obviously Niger, French speaking, a lot of French influence, some big companies operating in there, French government have some influence in there. How's that affecting your ability to do business?
We have a very, very good relationship, and we had the president on site. First time he'd been there since the early 1970s when he worked there, and he said, "Look, I support this project." So the fact that he was very keen to come up and be there, and brought ministers with. But the other thing I think you find interesting is that within that group of people that came up, there's like 1,500 people at that event. But we had the Tunisian ambassador, the Algerian ambassador, the Turkish ambassador. There were
Why? Slow weekend or something?
Nope, because they've just had a brand new state-of-the-art airport built, funded by the Tunisians.
Right.
The Turks are putting
King Mohammed.
Big money is coming in from other regions, and Niger, like many other countries, is realizing you can't be reliant on one source of income, whether that's the funding, whether that's the French or it's the Chinese. They are diversifying the investment flow that's coming into that.
So the Moroccans have always been very strong in sort of bringing Africa together and also joining it with Europe. I think they're very good country, very well run country. What are the Moroccans looking for in Niger, if I may ask?
People are looking,
you need something back.
Yeah, no, it's investment opportunities. They see an country that's growing. I mean, I had a long chat with the Turkish ambassador, and for example, and they're keen to find investment opportunities. They see, Europe is always the Turks is a difficult discussion given where it goes. So the next place for them is to head down into North Africa, and they are really pushing out aggressively. So, and you're seeing that within that whole structure, which is where the investment opportunities. And they're clearly seeing the investment opportunities are actually south of themselves, and heading down into that area.
So what about the French?
They're
still in there.
They're still in there. I mean,
influential as ever.
Less so, I would say,
right,
than they have been. I mean, there's a number of French companies have been leaving, not mining ones, other ones.
Right.
So it is,
and a few mining ones, surely.
Well, they haven't left yet.
They're leaving, though.
Well, they're closing Cominac.
Yeah.
So
that's a big deal. That's a big operation, right?
It is a big deal, and it's good for the world uranium market, because if that is going into closure in the next 1 to 2 years, it needs to be replaced by something.
Again, another number to be replaced.
Yes.
Okay.
So it's another number to replace.
How's it helping you?
It helps me because I think in the last, since I came back, I probably have had almost 100 CVs sent to me by people in the region.
I bet.
Yeah, So, but that's, it helps us obviously politically.
Yeah.
Uranium exports, as we've always said, is a big part of Niger's life and his budget and everything else that impacts it. And therefore, the political positioning between ourselves coming in and Cominac going out is very important to the government. They need to have another mine replace Cominac.
Well, it's jobs, it's revenue, it's tax, all of those wonderful
stability
things.
in the region, all of those things are sitting there.
But can I ask, how are you proving to them that you're going to get into production? You're junior, you're developing this thing, the end game is get it out of the ground, get it into market, sell it. I mean, what do they need to believe about you?
Yeah, we have a lot of conversations with them. I mean, I think the one thing that we've always tried to do in this project, it's no different to any investor out there, they're the same as everyone else, is we have always committed to finding finding a way to make that project work.
Right.
So, you know, the point...
So what are the problems you've encountered along the way?
I mean, I make the point to the president, you know, in a case of Arriva, you know, it doesn't matter to them whether they start in Mararan or not. You know, they're just going to start under the mine somewhere else in the world.
No big deal.
In our case, Madawaila is a really big deal, and therefore our commitment to make it work is the key to what we have to do, because that's where we are as a company, whereas, you know, they don't have to fight as hard. So our strategy, you know, we've done three PFSs, and each one has been better than the previous one. You know, we're currently, and you and I discussed this last time, which is how is GoviEx driving? It's all about the optimization, and then for me to be able to say, that's what we've done, and this is now what's on the table and what I'm trying to do, and showing them our commitment locally. And that's also important, because, you know, it's all very well just to turn up in a country and say I'm going to build a mine, but don't employ any Nigerians. You know, we've always had that relationship as well, and so they're having to have faith in us as well as anybody else that we're going to deliver what we said we're going to do. But, you know, we've always been good corporate citizens. We've taken our project from nothing to a massive resource. We've delivered everything on time that we'd said we would do. The environmental impact assessment they got was just blew their minds because it was so damn big from a deliverable point of view. So we've always done what we said we would do as a company.
Okay, so we need to let's look at where you are. I'm always thinking about the investors, the retail investors, family offices, high net worths who watch this show, so they understand where you're at, how you're positioned in the marketplace. So you're doing all of this work, you're hitting your budgets, you're on time, but you're effectively treading water, really, because you've got to manage your money in all of this process.
I mean, like anyone who's not in production, you are treading water until the uranium price gets to a level that supports you. Right.
So when the green button is pressed, at whatever price you think that is, whether it's $40, $45, but whatever the number is, how quickly do you get into production?
We have 2 years of construction. Right. We went through this last time, and depending on how simple I can make my final process design, which is what I'm working on at the moment, sub a year of final engineering work.
So that's 3 years in total?
That would be a reasonable long-term frame to go. But what I'm trying to do is shorten the front bit. Right. So that I can move faster if I want to. And it's driven, you know, and our strategy is the same as everybody investing as well at the same time. I'm making decisions on how I see the market going forward. Today. Do I believe, if I feel that the market is starting to accelerate away, then I have to put more commitment to it. Right. Because, you know, we're a small team. And we kept it small for a reason. Because I don't want to be burning cash. Of course. But if I suddenly think the uranium price is picking up, then obviously I have to build up my team that's around me. Got some CVs in? Deliver them. Why are you looking? You know, to deliver a project. You know, and so I have to make those decisions as well. So it's no different from an investor deciding whether he wants to buy into the equities. Right. I've got to make that the same decision, which is when am I willing to buy into the people skills? And again, I'm just trying to paint this picture for investors. Okay, there's a bit before that, which is money. So I know you've had some conversations around that. We always have conversations around that, and our strategy has always been to keep moving forward and getting this project better with as least amount. And so what I've been doing is parking the things on the side that don't need to be done yet, like costing the project. I don't need to cost the project. Why is that a quick process? It's about a 4-month process. Okay. But the problem you've got is, as you can appreciate, if you do it now and you're still sitting here for a year, the banks won't accept it. So why do it? You know, there are some things you just don't do because it's not worth doing yet. The timing has to be right to do them. Right. So the primary area that we've gone, and you know, I talked about this before, which is, you know, PFS was designed to be optimistic for, you know, and optimized. That was the word. Optimistic. That's another report. That's a different report. That's a PEA. To be optimized over 21 years. What we are now looking at is the first 7 years. Right. Saying what is the best project we can build in 7 years, but also we appreciated that some of the things that we had in the process design were new to the industry, you know, ablation. But so we're trying to remove technical risk at the same time and come up with a much better project. And we've made some big steps forward on that.
Right.
So I'm just waiting for some final results to come through, which I can bring out to you.
So you got all this. So the question was about financing, how long that takes. You're associated with the Freedom Group.
Yep.
I think China's all over Africa and share.
Yep.
Are they part of the discussions at the moment?
China is definitely part of the discussions.
Yeah.
I'm actually going out to. I'm meeting
specific groups. You're meeting specific groups. It's not just the Chinese.
No. I am meeting specific groups here
with
this
funds,
week.
with money.
Yes,
Got
but also there are other ways of looking at this. For example, there are Chinese construction companies out there who have got so much money, but haven't got any projects.
Yes.
And they're willing to lend you the money
Yeah.
to pay for the contract.
Okay.
So here's your money.
Interesting.
Give us the contract. We'll do the work.
Yeah.
So there are other ways to look at how you finance the construction of these mines as well, and access to capital. So while we've tended to look at the more traditional approach, and we'll continue to work with banks on the traditional approach, there are other aspects to have a look at here. And so that is where we're now starting to push towards more aggressively. Those also tie into sales of material at the end of the day.
Yeah, of course.
So
your difficulty is working out when the start point is, because
it's when to really press the big button.
Yeah, because you can have all of these studies done and redone, and
Yes.
optimized, optimistically,
Yes.
or not. But that's not going to tell you the price discovery is the bit that's going to tell you when you start to do this, because there's a point at which you're not going to move, and then there's a point at which you might move, and then there's we definitely will go at this point.
Yeah.
So you can't look out on your 3-year horizon, maybe three and a bit, right?
Yeah, use it.
Until you know when the start point is. So you can't make any promises right
Yeah.
now. So that said, you're sitting on how much cash today?
2.
You're going to have to go and get some more money
At some point.
at the beginning of the year.
At some point.
2020.
We've obviously got Liquid repaying as well.
Are they? What's happening with that? Tell me about
It's
that.
slow and steady repayment. I mean, we've made it very clear in our financials.
But remind people what happened there, because they owed you money.
They owed us money, but they were very helpful in the way that, because they did the deal at the time. So we bought back $9 million of uranium for $4.5 million on the basis that Liquid would buy the shares.
What have you done with that? Sold it?
Well, we sold that originally at $35 a pound for $7 million. So I sold it
$7
for $7
million. Okay, you made
sold it for
some margin
$7
on
and
it, okay.
bought it back for $4.5.
So you're still owed some money?
Yes.
Okay.
And the plan is now they are basically liquidating non-core assets on their side.
How long have they been doing that for?
They've had to get some into a public environment, which is what they're working on at the moment.
So again, have you any sense of timing on that?
Yeah, we did a forbearance agreement, which we've announced, and it should all be finished by it's either end of June or end of July next year.
Okay, you've got a ways off. So you are going to have to raise a little bit of money, and you need to work out how much that is.
Well, exactly, and that's driven by how fast this market goes.
Right.
You know, everything relates to, I think the best example is it's a bit like getting on the running machine. You know, when you get on it, first of all, you started off as a slow walk, and you plod along and you walk along until you feel you're warm enough, and then you start speeding it up. And then when you get a bit warmer and get a bit fitter, you speed it up a bit more. That's no different to the way that we're operating. You know, at the moment we're walking, we're waiting to go up a bit faster. We're not going to go from here and just go. It will be a slow and steady. We're going to get faster and faster as we get more confident with where the market is going.
Right. Okay. So it's coming.
It's coming.
You're going to look at how you manage that process,
Correct.
manage your overheads, your G&A, and all
Correct.
of that good stuff. Okay. I believe that. I mean, we've looked at the numbers. You don't pay yourselves horrific amounts of money like some do.
We hang around in the back of aeroplanes.
And you do hang around, you turn right.
I haven't been in an airport lounge in such a long time.
For Christmas, I'll get you one.
Thank you very much. Want my own airport lounge?
We do have this conversation a lot. We ask people about their remuneration package and how people do that, and we've had a couple of quite honest answers and a lot of evasive and furtive looks on that. But it's all public information. I always say to people, go look it up. If you feel it's not right, don't invest.
Correct.
Or if you're invested, complain. Or walk. So you guys are quite sensible, I think.
And we keep our corporate very small.
You do.
We only have 4 people in the corporate office.
You do.
So we're all multi-skill.
I appreciate that, and I think you can tick that box off. Are you heavily invested in this?
Mainly in options, to be honest.
Mainly in
I
options.
have shares. I think I'm sitting at about 600,000 shares. I came in late in this, obviously, and then for
Right.
a large part of the time we were private.
Yeah.
So I'm literally having to buy my own shares.
Right. Have you been buying?
I bought some, which is why I have 600,000 shares.
Right. Okay. So you bought a few things.
But my last batch of options have just died because they were when we first listed, and they were $2.15 US.
Right. Okay.
I took them because it was the right thing to do at the time we did the IPO.
Okay. Okay. So, okay, let's come back in country.
Yep.
Thanks for that. But let's come back in country and look at what you've got. Okay, the asset.
Yep.
Okay, so we talked about the money side of things. We talked about some of the people involved in country, some of the influencers. How you're going to, maybe go to the market for cash, and how you're going to raise cash between now and that point. So the asset. We'll tell people what you think you've got, because it's this kind of single asset, really.
In Niger, yes.
Fundamental, right?
Yeah, I mean, in Niger we've got a single asset, which is not pretty one most people have in one country. It's large. I mean, it's 126 million pounds of uranium in the ground, of which 100 million pounds is in the measured and indicated category.
Yeah.
We stopped drilling back in 2013 when we'd infilled all the drilling and basically said we won't do any more drilling yet because there's no point in doing any more drilling.
Yeah.
We have, and that's in the mining permit, we have 6 exploration permits wrapped around all of that.
Right. And the grades are quite...
About 0.14%, which for Africa is generally between 3 and 5 times higher than places like Namibia and Botswana and whatever. So
Right.
these are relatively high grades.
It's one of the higher African grades of it. It's nothing like some of the Australian or Athabasca basin things.
No, certainly
but,
not the Athabasca.
Right. And and the various reports that you've done so far, what are they, the studies, I should say, what are they telling you around the economics?
What we're looking at the moment is, if you look at the last PFS, we're looking at about $360 million capital, so $25 cash cost, including the byproduct credit from moly. It's a 21-year mine life that will produce uranium about 2.7 million pounds per annum.
Right, so that's meaningful.
It needs to get a sort of 20% IRR. You're looking at the current project at just over between $50 and $55 a pound uranium price.
Right.
That's what the current PFS says.
Okay. So it's a reasonable sized project. It's not one of the biggies.
Nope.
It's not one of the best grades, but it's
but I don't need to have one of the biggest. We're a small company.
Exactly. Now, I mean, again, trying to position this with people thinking of putting uranium in their portfolio, and they may have different ways of putting uranium in their portfolio. So there are going to be some more obvious buys, and there are going to be some which we'll take a punt on because the fundamentals are strong, and the IRRs or whatever they want to look at are okay. So you position yourself as one of the better African plays.
Yeah, and the important thing is obviously we have our mining permit.
Yeah, I know.
But that's a big issue in any industry.
Because when you do press the button, you can go.
I can actually go. Yes, I don't get in the car and find somebody hasn't put the battery in yet.
Yeah, little things. So what's your, just to finish off, what's your message to your current shareholders? And what's your message to people who are thinking about getting into the uranium space? Because it's tricky times. Let's not go into the macro. Let's just focus on you. Look, what have you got?
All uranium companies will go up with the macro, no matter who they are. That's the standard. What we have is 3 projects, 2 which are permitted. 1 is our focus to go to construction. Okay. Why do we do that? Because we're permitted. We have to leverage off the back of that permit to get value. You are sitting with a company, in the case of us, who in a very short period of time you can go from being a developer to being a producer. That is more than double on a valuation just on its own for pound in the ground and assessment. And so it's that ability to turn our pounds into cash flow is what differentiates us from many of our peers around us. And to do that within a reasonable time frame.
Right.
Okay. That is where GoviEx sits.
And therefore, where you sit in the selling cycles or buying cycles, I should
Correct.
say.
And then once you've got that project going, you've got long-term cash flow and you've got a company that can build on.
Do you think you've got the people on board who know how to get your product to market? I mean, from out of the ground, logistics to, train, port, wherever it's going, buying, selling, all of the, selling, you've got to sell into, presumably, utilities. They're the big buyers, right? So
correct. Do I have them all on my team yet? No. because I don't need them. I know where to go and get them.
Okay.
Yeah, and that's part of my conversations that I'm having around WNA.
That's fair enough. Sorry, we just say we finish up, but this is the last question. Okay, your share price, like everyone else, it's not where it needs to be. That's a nice way of putting it.
Yes.
What can you do, or what can you say to people, shareholders, to say, well, actually, it's all going to be okay. I know what I'm doing. It's, and actually there's
it'll be all right on the night.
It'll be all right on the night. So
to quote,
what are you doing to affect that? Are you just focused on the asset because that's all you can do because you believe the price is the key driver here, or do you think that you're doing everything you can to have things in place for when the market goes?
Ultimately, in the mining industry, price is the driver of whatever you do. I mean, in material. We dig things out of the ground and we sell them, unless you're a prospect generator, which we're clearly not.
Yeah.
And even if you wanted to sell assets, you need a market that's rising that people want to buy them because there's a better chance of them being able to put it into production than you are. What we are doing, which is we've always done, is we don't want to rely solely on the price, reaching a number. Our approach is optimize the project to bring down the price that we need to get to where we need to be. Right. So I don't want to be sitting here saying, well, this is my project, I have to get the price to here. Yeah. What I'm trying to do is bring down all my costs, operating costs and capital costs, so I don't need that price, I can actually get away at this price. Yeah. And therefore I'm accelerating this project to development.
Okay. Keep saying this is the last question. This one definitely is.
This is definitely
the last one. Is
an absolute ABF.
For sure. You talked earlier about access to Chinese groups with cash. They usually do have a lot of cash, unless they're trying to broker a deal. Have you ever thought about a roll-up? Because there are a lot of assets which are struggling for cash at the moment. Is that an African roll-up a realistic thing to try and do?
Yeah, I think it is. I think there are a lot of different projects in Africa at different stages. Yeah. We obviously started with just the one project. Yeah. And we now have 3 projects.
Yeah. So but it's all Niger, right?
No, we've got Zambia and we've got Mali, of course, don't forget.
Of course. And
we rolled even that one up because we acquired the original Matanga. Yeah. And then we added Africa Energy's permit next door to extend the size of that. So I've got 140 kilometers of strike length down there with 60 million pounds in the ground, permitted.
But come back to a roll-up strategy. If you've got cash, is someone says, right, what you're going to have a portfolio approach. You're going to have different stages, blended approach here. Are there assets, private, public, or companies that you think actually you're struggling? If I could come in and have a conversation, that we could create something quite good in Africa.
Yeah. Look. There are different ways of looking at it. Do you play a regional play? There are projects around us that maybe fit better together to bring down the overall costs and to synergize by working together. Whether that's a strategy working with my French neighbors or we're the ones that build the plant and other people work with us and come through our process plant because we're ahead of the game. That could be a synergy game that's playing through. Is it within the greater Africa? Obviously there are projects doing nothing at the moment, whereby it might be better to have more projects scaled up in a single entity. I don't think roll up on the basis of just looking for exploration ground is for us. No, we've got enough exploration.
No, thank you.
But there are projects. It may be better to create a bigger Africa play that has multiple assets in at different scales. Some have obviously, there could be built assets standing waiting to restart. Which would then make beautiful pipeline. Our whole industry, the bigger companies always try and create the pyramid, producing assets, projects ready to be built, all the way through down to grassroots exploration. We've tried to do that with the assets that we've got, and there's nothing to say that can't be expanded. Yeah. Would we look outside? We did initially, before we acquired the Denison's assets, look outside of the country. One of the reasons we didn't, we just felt we were just not getting our value for our African assets compared to what they were relative to what other people were getting value for their assets. They said, the time's not right. Yeah. And also, I think from a management point of view, you've only got so much time.
It's true, and
you can't be in all places at once.
It's true. It was just a question because we've had some great success in the past with doing roll-ups, and it may seem strange to some investors to ask a question like that when the market's so dead. right?
The Rothschilds made a lot of money when there was revolution on the streets.
That's my point.
Exactly.
We have certainly in the past, and I think that I wondered if anyone had made that move.
Well, we already did and started it in 2016. I mean,
Right.
that's really where we started that process and felt there was value to be had by putting projects together, diversifying our risk. And each of our projects is different, so that we haven't actually got three same projects. They're each one metallurgically different, design different, geology different.
Right.
So we've got, we spread our Africa risk because we understood, being a one-trick country can also be awkward if your politics suddenly change on you.
True. Look, one for another time. Thanks for coming in.
Absolutely.
Enjoy yourself at the WNA. I hope
Always.
you get everything out of it that you're looking
Yeah,
for
so do
in
I.
terms of information.
So do I.
Let us know what the general mood and inclination is.
Yes.
Okay?
Absolutely.
We'll stay in touch. Thank you very much.
Good. Thanks, Ed.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.